All right, I wanted to record the analysis of this backtest exercise and also, go walk through price action as it's been helpful to me in backtesting. I want to record the thought so I can go back to it. So we're on EURCAD here, looking at November of 2024. We are bearish on the 15-minute, and I've identified this supply zone here where mostly Asia session uh, chopped around, creating an accumulation. There's a small liquidation you can see there right before the distribution. We do tap into the zone again in London, but then we have the true move, let's say, that creates the break of structure uh, in between London and New York. And so the hypothesis is that if price gets back into this area, there would be sellers, strong sellers, to defend the area. And so we actually don't see anything in New York session, so this would have been a no trade day. But when we come back in the next day in the morning, we've already pierced the area as of 8 o'clock. And so we'll drop down to the 1 minute here to talk about what we see in terms of price action. Now there was 8:30 news, so I would let that pass, and you can see the big jump in price as a result of that. So what happens now is our exercise of reading price action. So price jumps up, liquidates these local highs, and fails to close below the candle that did perform the action of liquidation. And so we then determine this high to be weak and expect it to be taken, which it is about 5 to 7 minutes later. It's liquidated. However, this price action and the sellers who stepped in at this point are pretty choppy. You can see that the candles aren't very big. They're pretty up and very small, and they ultimately fail to close below this low that we were originally trying to close under. You can see that buyers defended it before sellers came in, but even then, they don't truly close it. I think if they did, it's by a tick, so not very convincing. And so by the same logic, we say that this high is now weak and expect it to be taken. So buyers step back in with significant volume. There's a big candle here from this demand zone. We can see the sellers are trying to push down. Buyers come back in and defend aggressively with displacement, ultimately taking this high, which is what we wanted to see and expected to see. And so now again, we play this game of, can the sellers take the low? Now, because of this aggressive candle, we can say that there are strong buyers in this area. And so now instead of targeting, this low, we want to target this low and be maybe a little bit more aggressive because it makes sense. We see displacement here, and that has taken these highs and has helped take the weak high we had identified earlier in the morning. And so now we wait, and we can see that sellers come in. You can see that the candles are a little bit more confident than what we saw here. There's less of them, and there's 1, 2, 3, 4, 5 of them covering and of ultimately closing below with displacement. And that's the key. We close below this area, this point of interest, with aggression. And so the entry can be placed anywhere in that fair value gap. I do that at the top because we also have an inverted fair value gap. So that's another key confluence. And we put our stops just above the highs here. So price now, what we want to observe that I keep forgetting, and then this video will help me remember, is that we do want to observe the price action after we perform our break of structure of our key area, or let's call it a change in delivery. This candle is a buy candle, and it's pretty big, but it does not engulf. And it also does not create a fair value gap as it's moving up. We can see that it barely, I think the wick's about touched. There's no fair value gap there. And then there's also sellers who come in immediately to defend that level. At this point, it's pretty confident to put the trade on and leave it on. At which point, a couple minutes later, we're tagged in. We also are identifying internal liquidity to target. And so, of course, we have this area of liquidity, this low here. Since it failed to close above this high, it has now become weak. And so that becomes our first target. at about 1 hour and change. We have a second target here, which coincides with this old order block or demand zone, let's call it. We can go to the 5 minute to get a clearer picture of areas of interest to target. We can see that there's liquidity here and a nice accumulation, manipulation. Let me just zoom in. We have accumulation, manipulation, and distribution here with some liquidity. So tracking to this is a key area of interest for profit taking. And then, of course, we have our ultimate session liquidity down here. And so now with that stated in terms of how we got here and where we're going, we can see now that, of course, price would then melt. And is this associated with the 930? Let's see. No, this is past 930, so that's another thing to be mindful of. Your entry would have happened during the open, which, a little dangerous, I guess. Let's see. This, you would have been tagged in, but even if you had waited, so this is an interesting point. We're on the 5 minute. Even if you said, all right, I don't want to get chopped up in the open, you could have left your trade, unfilled at this point, and only after the first 5 minutes had passed, and you would have seen this candle close, bearish. At that point, you could still put it on, hoping that price will come back, which it did, and then it immediately melted, and would have taken PT1, PT2, and then just see how it goes. I believe it will, and then smashes through PT3. So this is a great setup and a good read on price action, and something I should be looking forward to in terms of weak highs and weak lows to take. It will require looking at the chart a lot more when price has entered a point of interest, but I think it's worthwhile given how price is reacting and against the things I'm learning. So that's it for now, and this will be a good study material.